Greetings of the day. So we are back with our next video to discuss about the final accounts of NPOs. Before we go to the final accounts, we know what NPOs are. We have discussed that in the last video. NPOs are the non-trading organizations which are established for earning, not for earning profits, but to render service to the society. As we discussed, these organizations work to help their members and the society, and their main objective is not to earn profit. So in the current video, we are only going to discuss about the final accounts of NPOs and particularly about the receipts and payments account. So we all know if it's a trading concern, the final accounts consist of the trading account, the profit and loss account, and the balance sheet. Now we are discussing about non-profit organizations. So these organizations, the final accounts consist of receipts and payments account, income and expenditure account, and the balance sheet. So in the current video, we are going to discuss about what is a receipts and payments account. So the NPOs maintain this account called the receipts and payments account. This account is a real account, and as we all know, the rule for real account is debit what comes in and credit what goes out. It is exactly similar to our cash book. So this account is a summary of the cash and bank transactions. So as we prepare a cash account in the trading concerns in the similar format, we prepare the receipts and payments account in the non-trading concerns. So as we know, the rule debit what comes in, credit what goes out. We follow the same rule, and hence all the receipts of cash are debited and all the payments of cash are credited. So that means if cash is coming in, we debit it, and if cash is moving out, we credit it. And to remember, this account starts with the opening cash and bank balances, and it also ends with their closing balances. So the beginning point of the account is the opening balance of cash or bank, and the ending point of the account is the closing balance of cash and bank, which is again carried forward to the balance sheet. Now, this account is usually not a part of the double entry system. It includes all the cash and bank receipts and payments, whether they are related to current, past, or future periods. Now, this is an important point which we need to remember. The account includes all cash and bank receipts and payments, irrespective of whether the receipts and payments belong to the current year, next year, future year, or the previous year. So if you have received, you debit it. If you have paid, you credit it, irrespective of which year it belongs to. The final surplus or deficit for an accounting period cannot be ascertained from this account. So you cannot calculate the profit or loss, or you call it a surplus or deficit from this account, since this account will only show the cash and bank position, and it will exclude all non-cash items. So if the items are in cash, only then it will be included in this account. All other items will be excluded from this account. So this is a glance at the receipts and payments account. If you look at it, all receipts are debited and all payments are credited. The account starts with the opening balance of cash and it ends with the closing cash balance. And we need to remember here, the account will not show any surplus or deficit. It shows only the cash position from the beginning of the period and the cash position at the end of the period. So that's it in this video. Thank you.